Let's discuss markets with Abhishek Basumallick also joining us from Kolkata. Abhishek, budget done and dusted, bulk of global market stability has also set in. RBI policy, UP elections would be the next two triggers to watch out for the markets in the medium term, short term. Your core competitors are actually very long term, but still, do you think these two will be also something to watch out for?
Ajay, thanks for having me on your show. Good to talk to you again. Yeah, I mean, see, the thing is like UP elections or some other elections, these things will keep coming. What we should be more looking at is where the money is flowing. And like you just now mentioned, FII, flows have more or less stabilized. Again, this was something which was sort of bound to happen because India is a very long-term story, one of the best growths in the world today. And a few basis points of interest rate rise in the US is not likely to completely stem the flow. These are knee-jerk reactions which happen in the markets. But if you stretch your time horizon to maybe a month, 2 months, most of these things get priced in. So like you said, I mean, probably markets are going to be consolidating and taking its breath for, holding its breath and probably waiting for the next move up.
State ancillaries, real estate, one pocket has done phenomenally well, the Oberois, the Lothars of the world. Then there are names which have not done. In fact, IT related, wage hike related names have also done well because of good wage hikes in South. But there are some odd names like India Bull Realty. There's a management change happening there, but no one knows of the road ahead. Have you worked on some of the underperforming names? Have you taken a look?
Yeah, I have. And see, if there are again two, exactly like you said, there are two segments. Some stocks which have done extremely well, primarily because, like you just said, IT being a core determinant of demand, especially in the IT-heavy cities like Bangalore, Hyderabad, Pune. So some of the real estate players have done really well. The other segment which has done well, obviously, is the premium segment, right? Because we've not seen a lot of demand destruction or wealth destruction during the last 2 years in the premium segment. The stocks which have not really done well are typically ones which are catering to maybe the mid segment or the lower end of the segment. So those have not done well, but my guess is this is just the beginning of an IT cycle, of a real estate cycle, and everything should do well depending on how the companies execute their projects. So I don't see over the next year, 2 years, any particular company not doing very well. I mean, everybody will do well. You have to pick your spots in terms of where you are more comfortable, because because real estate is more, location specific. So you need to be able to do that kind of work to understand what is the pipeline and which location has what kind of demand supply mismatch.
The realty names you are betting on for the long term, which are part of your portfolio? I don't want a short term buy sell kind of a call.
See, on the longer term, you could be looking at stocks like DLF, you could be looking at stocks like Shobha, even India Bulls Real Estate could be actually be a good long-term bet in the real estate sector. If you come down to the ancillaries, there are a huge number of picks that you can look at. You can look at the plywood sector, the plywood MDF, that one. You can look at the ceramic tiles. You can look at sanitary ware. You can look at paints. So all of this, these are directly related to a boom in the real estate sector. And you have a lot of very good, well-managed companies in each of these segments.
Understand your portfolio approach on capital goods and engineering, because yes, there's a capex cycle, which is a cusp of takeoff. The budget was also intended to provide a boost there. How would you play that in your portfolios?
Yeah, I think I've been bullish on engineering capital goods for at least last 6 months, and the cycle is turning. I mean, once you have this all these PLI schemes starting to play out, manufacturing starting to happen, capacities are getting getting built up, you will get a boost in a lot of these industrial names, engineering names. So you could look at all sorts of consumables kind of stories, bearings. You could look at uh, you know the entire segment per se. I mean, most of these have been most of the industrials have not performed for the last 4 or 5 years. Although last 1 year, I think a lot of these stocks have done well, but they're still reasonably placed compared to a lot of other consumer names.
Just a quick, I'd like to play a bite of Rakesh Jhunjhunwala, one part of it, where he talks about markets. Then we'll talk about, I would like your view on valuations of the market and Nifty, for example, the way next 3-4 year valuation is stacked up. We'll try to put a base case and a best case scenario there. Let's play Rakesh's view on Nifty.
Well, anything can happen, and the Nifty goes to 15,000. That's not the reversal of the bull market, but I think it's highly unlikely.
The view on the street is that we had a good 2021, double-digit return for indices, more than 40-50% for small and mid-cap indices. This could be a flat year with low return. Do you think this will be a flat year with
no,
low
I
return?
don't think it'll be flat. I think we'll have return.
That's the headline. So what do you think is in store for this year?
I mean, I can predict the direction. I can't predict the depth.
The quantum. You think
I don't
quantum is
know.
going to
I
be
can't
big?
predict the quantum.
No, when you say it will not be a flat
I
year,
don't try to predict myself. What can I tell you?
I completely respect
I
that.
don't
But
think it'll be a flat year. I think it'll be a positive.
Abhishek, do you think it will be a positive year? And what do you think base case and a worst case on valuation front?
I would exactly echo what Rakesh just mentioned. I personally, it's very difficult to call out on a year-to-year basis what will happen. But I would be honestly very surprised if we end up this year in the negative. I think we will be positive. We will probably not be as positive as last year, but I would be surprised if we don't do very well, because I'll give you my rationale, right? So what is happening is a lot of the negatives that are there are sort of priced in. If you look at the stocks that are now sort of coming out, the business performance that is happening in terms of GDP growth, in terms of business growth, I would expect 12 to 15% growth more or less in a large number of companies that are there in the Nifty or in the broader market, say NSE 200 sort of companies. Now, if that is the case, if you have a 10 to 12% kind of growth, valuations are unlikely to contract. We might see some interest rate hikes, but my take is that we will not see a lot, not in India, not in US as well. And unless we, something really dramatic happens, which we are not aware of, there could be a war somewhere or, some other natural disaster happens. Other than that, I don't see a case where, markets are going to really tank off and we would have a miserable year. I would be very surprised if that happens.
Been adding to your portfolios last 2-3 months. There were two reasonable kind of jerks in the market. We went lower back to 16,600 odd. Mid caps corrected quite a lot. Did you add anything?
Yeah, so we've sort of been pivoting towards engineering, towards capital goods in the last 6 months. So we've added a cement, we've added a engineering company, we've added a couple of engineering companies for that matter. We've added a power company in the last six odd months. So that's where we are pivoting, and not saying that other sectors will not do well. It's more a question of maybe the near term, meaning next 1-2 years of runway. That's the way I would want to position myself.
We'll let you go on that one. Thanks so much for your time today.